All right, Confused Zoomers, we've got some good ones today. What is up, everyone? It's the Confused Zoomer. We had a great week this last week. We've also had some learning experiences. Turns out, I learned some things when I actually invested my own money. And it's like some weird quirks in the math, which we'll get into towards the end of this video. So first, let's get into the news. All things considered, this was a really quiet week. There was a scare on Friday that the US would go into war with Ukraine, but that's been a scare for the last several weeks. Tensions haven't exactly gotten better, but like whenever one side is saying we're gonna invade, tensions aren't gonna be great. So, other than that, the conditions of these weeks are the same as last week. Oil prices are still going up. We still have a shortage of semiconductors. And Pilotin was in the news for just being weird, as it was last week. So, like, basically, nothing major happened. So, with the uneventful week in the news, let's get into the review. All right, so week 3 in review. So, honestly, we had a great week overall. You can see the total in the bottom, 42%, 0.2%. It's like the overall. Sweet. Now, there is a slight quirk. So we're going to actually have to talk about what that means exactly at the end of this video, because that 42% isn't right as it turns out, and I just learned about that. But first, let's take a look at the stocks. So first off, with Pfizer, I'm going to be real, I was wrong. There really isn't another way around this one. I thought Pfizer was a great bet, a really easy bet. I mean, their revenue has been up for a while. I thought that they're going to beat their last quarter, and because of the vaccines and all the stuff that they're doing for that, turns out when we're looking at a company the size of Pfizer with 78,000 employees, they do a lot more than just vaccines. And because of that, they beat their earnings per share, but they missed their revenue. And that missed revenue was a 4% loss overall in the past 5 days. Now, if we're being honest, if you held on to this for a little bit longer, maybe you could make that back. But I was wrong here. Just flat out. Had you bought on Monday, you were going to be less by the end on Friday. So that's on me. Lesson here to be learned is that when you're looking at a multi-billion-dollar company like Pfizer, there's a lot to be looking at, more than just one individual aspect of their overall product line, which I did not know. Now to the big earner, Bark. So Bark was a great return. It did almost exactly what I said it would. Now you're going to see that Bark is kind of down actually overall in the past 5 days. But those peaks that you see there, and that number that you see there, the 4.24, so Bark, if you did what I said to do, would have made you that 22%. Actually could have made you more, if we're being real. So I said buy it right around Wednesday when they release their information, and then sell it on Thursday. And you can see this graph, that's exactly that number I picked. You would have been up really high. So I picked the number 4.28 because that's about what looked like that average high was. You could have sold it at a higher number there, like 4.35. I guess you could have sold it a little lower. But on average, as long as you didn't hold on until Friday past 1:30, you would have made money somewhere in here. I chose the average high because there was this huge window of over 24 hours when I said you should sell, that you could have made a lot of money on it. And this one worked perfectly. It did exactly what we were hoping for. Now on to Evolution Petroleum. So this one was also a great one. I actually personally invested in this one. I sold somewhere right around here, I believe, on Thursday. So I made a nice little 10% return. Had you bought on Monday and held until Friday, possibly even longer, you're looking at an almost 15% return. These guys did exactly what we thought they would do. They beat their quarterly financials. They did it because oil prices are up, and you can see this huge jump in revenue. They had been beating their financials for a while. They did a little bit worse on their earnings per share, I'll be real. Overall, still really good. And they had this long track record history of doing it for this last year. And we're going to be looking at a few other stocks this week that kind of are along that exact same format of Evolution Petroleum. Felt really good about this one. That's why I invested in it. Did exactly what we were hoping for. Now, finally, Peloton was the other one. So this one was crazy. I put down the number of 9.68%. For being real, you could have made with Peloton way more than that. I mean, you could have made with Peloton anywhere from nearly double to, you could have made with Peloton 30%, 40% even at one point. I mean, it was crazy. So I had said wait until about Tuesday, end of Monday before you bought. And if you'll see here, beginning of Tuesday, end of Monday, it's time to buy, and then it spiked. And it's still up way more than that. Now, originally, what I had said, though, was that wait until Tuesday to see how its financial report did, because we were expecting for their financial report to be way under. So while that was the right time period for what we were saying, the reason why I said, look, wait until Monday or Tuesday was because we were expecting for their earnings per share and their revenue to just drop, and that would be the time to buy. And that's exactly what happened, but in a really weird way. So you can see their earnings per share were down by a third, and they missed their expected revenue by a good amount, not as much as their earnings per share. So their stock Tuesday should have dropped like I predicted it would. But normally, when you fire 2,800 employees and get a new CEO, that's not a great sign for the long term of your company. But since the long term of Peloton seems to be a little bit better than what everyone was hoping for, with these companies looking to buy it out, it looked like the company was moving in a new direction for them. It looked like they're trying to change things up. Not entirely what I was expecting, but like I said, pretty much if you had bought Peloton at any time that I'd recommended on Monday or Tuesday, it was going to go up. I said the week average for what I put down in my report. This is still a really weird case with Peloton. Personally, I would stay away from him for this next week because there's a lot of things that are going on in here that from the outside don't make a lot of sense. But there's still some opportunity to be made here, so keep an eye on it. Alright, so with the week in review done, let's take a look at what stocks I think you should buy for this next week. So first, as I always like to start it, is with the big name companies. And this one, though, is going to be a little bit more controversial than usual. So the first thing you should do when I say buy Facebook is go, what is wrong with you? With the news of the past 2 weeks is totally fair. Facebook, like I said last week, has had a lot of revenue issues now that Apple has changed its privacy terms. But the changes and the hit that Facebook has had with a third of its value, I don't think is actually reflective of its overall value still. And there are a few important indicators that show that. So the first one is the price per earning ratio. So what is that? What is that? So price per earning ratio is the price of a share divided by the earnings per share. That generally speaking, a healthy stock is between 18 to 20. And an undervalued stock is a little under 18, and an overvalued one is over 20. So, but with the pandemic, a lot of things have been overvalued lately. Amazon's price per earning ratio is at 47. Apple's is at 28. Tesla's is at 175. Oh my God. So Facebook for a tech company being at under 16 is kind of insane. That just has not happened during the pandemic for a while. They're still with their current earnings undervalued. They're still making a lot of money. Definitely a risky buy in the short term, but I do see this one going up after 2 or 3 weeks. So now with the risky one aside, I've got two stocks that I feel like are much safer options. First is going to be Lattice Semiconductors. Now, Lattice Semiconductor Company Corporation? Lattice Semiconductor Corporation. These guys are another semiconductor group. For their financials, they've had steady growth over this whole time. With semiconductors becoming even more valuable, these guys are definitely going to have a product that more people want. Scheduled to announce their next earnings on Tuesday. So I really think that it's a safe bet to say that these guys will go up like every other semiconductor company has been. And with their track record of going up, I think it's a pretty safe bet. So Magnolia Oil and Gas Corporation is another Houston-based oil company. It's going to be the first of the two M oil companies that we're going to be looking at. They are doing steady. Their financial quarters have had a track record of going up over the last year. They're scheduled to report on Thursday. With oil prices going up, I really think that it's only going to go up in value. I think this is kind of like Evolution Petroleum from last week. I think you're looking at a pretty safe bet. And we have Marathon Oil Corporation. But big preface here, Marathon Oil Corporation, not Marathon Petroleum. I was looking on my stock app, saw that there were the two. Do not buy the petroleum instead of the oil. They are not the same thing. Marathon Oil, not petroleum. So these guys have a huge revenue. They have beaten their financial quarters not as consistently as the other group, but they beat the last one by a lot. Feel good about them. I do have to say a negative thing is that their net change in cash has gone down by a lot. So this is something to keep an eye out for. But other than that, they have been doing very strong, clearly expanding. I think this is another safe oil bet for this week. These guys are going to be reporting on Thursday as well. So I think that's a really safe bet for this week. Buy it, get it sometime around Thursday, before Thursday. Should go up on Thursday. Sell it sometime after Thursday. All right, so just to recap for stocks this week. We have our little bit of a risky option, Facebook. It's looking like it's undervalued, even though it's taken a serious hit for its revenue. It may go down in the next 2 days, but I think in the longer term, definitely over 2 weeks, this will have a great return on it. Second, we have Lattice Semiconductors. Again, another semiconductor during a shortage. This will go rather pretty, I feel like. Third is the Magnolia Gas Corporation. And finally, Marathon Oil Corporation. Not Marathon Petroleum. Oil. Same thing as last time, another Houston-based oil company. We're looking good. So that's week 4's predictions. After this, we're going to do a month in review. Really hope I was able to do an audio clip over that. Otherwise, I just kind of seem like an idiot. Anyways, guys, remember, it's okay to be confused, but keep learning.